All right, so today we're going to be talking all about business.
Ooh, exciting.
Yeah. So specifically,
Yeah?
how do you measure the true worth of all your hard work?
Okay.
Beyond just looking at your bank balance,
Yeah,
we're doing a deep dive on business valuation.
I love it.
And, don't worry, you don't need to be prepping for a sale or anything to find this useful.
That's right.
This is going to be hopefully helpful for everybody, no matter what stage of business you're at.
Exactly. And even if you're not planning on selling your business anytime soon, I think knowing how to kind of gauge its value is like having a secret weapon in your entrepreneurial arsenal.
Yeah, for sure.
It can help you secure loans, make strategic decisions,
Hmm.
and just like sleep better at night knowing you've got a solid grasp on what your business is truly worth.
Totally.
Yeah.
So we've got some great resources to guide us on this journey today.
Okay.
We've got insights from Forbes, the M&A Source, and the Corporate Finance Institute. So first things first, why should we even care about this whole business valuation thing
Yeah.
if we're not actively trying to sell?
Okay, so think of it this way. Publicly traded companies,
Mm-hmm.
they have their share prices that are constantly fluctuating, right?
Right.
That's the market telling them what their perceived value is at any given moment.
Yeah.
So business valuation is kind of like that for a private company.
Mm-hmm.
It's a snapshot of your company's worth, even if you're not on Wall Street.
Gotcha. So it's kind of like your own internal,
Exactly.
stock price.
Yeah.
Okay, I get the analogy, but can you give me a real-world example
Yeah.
of when knowing my business valuation would actually come in handy?
Absolutely. So
Okay.
imagine you need to secure funding to expand your operations.
Okay.
A solid business valuation gives lenders a really concrete picture of your company's financial health and potential.
Right.
So they're more likely to approve your loan
Okay.
and even potentially offer you better terms.
Interesting.
Yeah.
So it's like a credit score.
But for your entire business.
Yeah.
Yeah. And it goes beyond just loans, too.
Okay.
Think about estate planning,
Mm-hmm.
resolving disputes among partners, or even attracting potential investors.
Yeah.
Having a clear objective valuation can be a game changer in so many situations.
Okay. That's starting to make a lot of sense. So something that really stuck out to me from the articles we read
Yeah.
is that, it's not just about revenue and profit, right?
Right.
There are other things
Yeah.
at play here
100%.
that can impact a business's value.
You hit the nail on the head. There's this misconception that you can just slap a multiplier on your profit and call it a day.
Right.
But as Forbes taught us, two businesses with similar revenue and profit can have drastically different valuations.
Yeah, they had that example of the two companies providing similar services,
Yeah.
one using a project-based model and the other
Yeah.
a software as a service or SaaS model.
Yes, and the sauce business sold for a whopping 28 times earnings before interest taxes, depreciation, and amortization.
Whoa, hold up, EBITDA.
EBITDA.
Okay.
Okay.
I think we need to break that down for our listeners.
Okay.
Not everyone's fluent in finance speak.
You're right. My apologies.
It's okay.
So EBITDA is essentially a measure of a company's profitability.
Yeah.
It strips away things like interest taxes, depreciation, and amortization to give you a clearer picture of the core operating performance.
Okay, so back to those two companies.
Yeah.
The SaaS business sold for 28 times EBITDA.
Right.
What about the project-based one?
It went for 3 times EBITDA.
3.
Huge difference.
That's crazy.
Yeah.
So what made the SaaS model so much more valuable?
Yeah.
This is where it gets really interesting for me.
Yeah.
Because I bet a lot of listeners are wondering how they can apply this to
Good
their
stuff.
own businesses.
Well, think about the nature of SaaS, right? It typically involves recurring revenue,
Okay.
which means a more predictable and stable income stream. And because software is, relatively easy to scale, there's a higher potential for growth compared to a project-based business that might be limited by resources or manpower.
So scalability and recurring revenue are two big things
Yeah.
that drive up valuation.
Yes.
This makes me think, even if you're not running a tech company,
Right.
are there ways to build in elements of recurring revenue?
Totally.
Or find creative ways to scale your operations?
Yeah, that's a fantastic point. And that's where I think understanding these valuation drivers can really spark some innovative thinking for business owners.
Absolutely.
Yeah.
So we've established that business valuation goes beyond just those basic
Yes.
financial numbers.
Yeah.
It's about digging deeper into the qualities and characteristics
Right.
that make a business truly valuable?
It's about looking at both the quantitative and qualitative factors.
Okay, so on the quantitative side, we've got the financials.
Yes.
But what are some of the qualitative things
Yeah.
we should be thinking about?
Okay, so think about your customer relationships.
Right.
Are they loyal?
Mm-hmm.
Do they rave about your products or service?
Right.
That kind of brand loyalty is gold.
Yeah.
Then there's the strength of your management team.
Okay.
Do you have experienced leaders with a proven track record?
Mm-hmm.
What about the scalability of your business model?
Right.
Can you grow without hitting major roadblocks?
Yeah.
These are all qualitative factors that can significantly impact your valuation.
So even if two companies have similar financials,
Yes,
those less tangible qualities can be the tiebreaker.
absolutely.
The thing that makes one business
Totally.
worth significantly more.
100%.
Okay, so let's get down to brass tacks here.
Okay.
What are some of the red flags?
Right.
The things that might make a business
Yeah.
less valuable
Okay.
in the eyes of a potential buyer or investor?
One common risk is what's called key person risk.
Okay.
This is when a business is overly reliant on one or two individuals,
Right.
maybe even the owner.
Yeah.
If that person leaves, could the business continue to operate smoothly?
Yeah, right. So you need like a solid team, not just like one superhero running the show.
Exactly.
It's about building a business that can thrive,
Yes,
even if someone decides to move on.
100%. Another potential risk is customer dependency.
Okay.
What if a huge chunk of your revenue comes from just one or two big clients?
That's a scary thought.
It is.
It's like, what happens if you lose one of those clients?
Exactly. It could be devastating.
Yeah.
So diversifying your customer base is crucial.
Okay.
And the same principle applies to your suppliers.
Right.
Being reliant on a single supplier can make you really vulnerable to disruptions in the supply chain.
Interesting.
Yeah.
So spreading the risk, both in terms of customers and suppliers,
Yes.
is a key factor in building
Big time.
a more valuable and resilient business.
Absolutely.
Yeah.
And then there's what we call owner independence.
Okay.
Can the business run without the owner being constantly involved in every single decision?
Right. So building systems and processes that allow for delegation
Of course.
is important,
Yeah,
not just for the owner's sanity,
of course.
but also for the long-term health and value of the business.
You got it.
This is fascinating.
Yeah.
Okay, so we've uncovered some potential risks,
Yeah.
but I'm curious, what about the flip side?
Okay.
What are some of the growth factors that make a business
Yeah.
more attractive and can potentially boost its valuation?
All right. So one of the biggest green flags is what we call product market fit.
Okay.
It's like finding that sweet spot where your product or service solves a real problem for a well-defined target market.
Mm-hmm.
Yeah.
So it sounds simple in theory,
Right.
but I imagine it's a lot harder to like execute in the real world.
It is.
How do you know
Right.
if you've truly achieved product market fit?
That's a great question. One clear indicator is strong and consistent demand for your product or service.
Okay.
You're not having to chase down customers or convince them of the value you offer.
Right.
They're coming to you because you're solving a pain point that they desperately need addressed.
So it's not just about having a great idea, it's about validating
Yes.
that idea
100%.
in the marketplace
Yeah.
and ensuring there's actual demand.
Yes.
Okay.
Another crucial growth factor is market readiness.
Okay.
This is all about having the infrastructure in place to handle growth effectively.
So like, do you have the right team?
Right.
Are your systems and processes scalable?
Exactly.
Can you efficiently manage increased demand without sacrificing quality?
Yes, you could have the most amazing product in the world,
Right.
but if your operations can't keep up, you're going to hit a ceiling pretty quickly.
Yeah.
Yeah.
This makes me wonder, even for businesses that are already established,
Right.
are there ways to assess their current level of market readiness
Absolutely.
and identify areas for improvement?
It's a continuous process of evaluation and optimization.
Okay.
Start by honestly assessing your team's capabilities.
Hmm.
Do you have the right talent in place to support growth?
Mm-hmm.
Are your systems and processes streamlined and efficient?
Okay.
Do you have clear metrics in place to track progress and identify bottlenecks?
It sounds like this whole market readiness thing requires a lot of introspection
It does.
and a willingness to constantly like adapt and improve.
It does. But the payoff can be huge.
Yeah.
When you have strong product market fit and a high level of market readiness, you're essentially sending a signal to the world that your business is primed for success.
Yeah, that makes sense.
Yeah.
Okay, so let's say I'm convinced.
Okay.
I want to get my business valued.
Yeah.
Do I need to hire someone, or is this something I can tackle on my own?
While there are online tools and resources that can provide a rough estimate,
Okay.
if you're looking for a truly accurate and comprehensive valuation, it's best to work with a qualified professional.
Yeah, that makes sense. This isn't something you want to, gamble with.
No.
So who are these valuation gurus?
Yeah.
And what should I be looking for when choosing one?
So you've got certified public accountants,
Okay.
CPAs, chartered financial analysts or CFAs,
Mm-hmm.
and accredited business appraisers.
Okay.
Those are the folks that specialize in this area.
So you want someone with the credentials and experience to back it up.
Absolutely.
What else should I consider?
I think it's crucial to find someone who understands your specific industry
Right.
and the nuances of your business model.
Yeah, someone who values real estate might not be the best fit
Right.
for a tech startup.
Exactly. It's like going to a specialist for a medical issue.
Totally.
You want someone who knows the ins and outs of your particular situation.
Okay, so I've found my valuation expert.
Okay.
What happens next?
Right.
Do I just hand over my financial statements
Yeah.
and wait for the magic number?
It's a bit more involved than that.
Okay.
Prepare for a deep dive into all aspects of your business.
Okay.
The valuation professional will want to understand your company's history,
Mm-hmm.
its current performance, and its future potential.
Sounds intense.
It can be,
Okay.
but it's for good reason. They'll also delve into your competitive landscape, the overall economic climate, and those all-important qualitative factors we've been discussing.
So it's about looking both inward at your own operations
Yes.
and outward at the forces
Right.
that might impact your business.
Yeah.
Is there anything I can do to prepare for this process?
Gathering organized financial records is essential.
Okay.
Having a clear strategic plan
Mm-hmm.
and being prepared to openly discuss your business operations goals and challenges will streamline the process.
So it's like a good opportunity to do a bit of soul searching
Yeah.
and really clarify what I want to achieve
Right.
with my business.
Yeah.
Okay, but let's get real.
Okay.
What if the valuation comes back lower than I expected?
Yeah.
That could be a bit of a blow to the ego.
It can be, but remember, a business valuation is an objective assessment,
Okay.
not a personal judgment.
Mm-hmm.
And often, a lower than expected valuation
Okay.
can be an incredible opportunity for growth.
Okay, I like that perspective. How can I use a less than stellar valuation as a springboard for improvement?
It can highlight areas where you might be underperforming
Okay.
or where you need to focus your efforts.
Yeah.
Perhaps your marketing isn't as effective as it could be,
Mm-hmm.
or your customer service needs a boost.
Gotcha.
Yeah,
So it's like getting a checkup at the doctor's office.
exactly.
It might not always be pleasant,
Right.
but it can help you identify issues and take proactive steps to improve your overall health.
100%.
Yeah.
What about the flip side?
Right.
What if the valuation is higher than expected?
Yeah.
That's a great problem to have.
Yeah.
It reaffirms that you're on the right track
Okay.
and can give you the confidence to pursue new opportunities,
Yeah.
secure funding, or even consider an exit strategy.
Yeah. It's like a validation of all your hard work
Totally.
and a sign that you're building something truly valuable.
Absolutely.
So it sounds like getting a business valuation isn't like a one-time thing.
No,
It's something you should revisit periodically.
absolutely. Especially if your business is going through significant changes,
Okay.
rapid growth, new product launches, or shifts in your industry.
Yeah.
Just like you wouldn't rely on a 10-year-old medical diagnosis.
Right?
You shouldn't rely on an outdated business valuation.
Okay, let's say I've gone through the process.
Yeah.
I have my shiny new valuation in hand.
Okay.
Now what?
All right.
How do I actually put that information to work for me?
That's where the real magic happens.
Okay.
Having a clear understanding of your company's worth empowers you to make more informed decisions across all areas of your business.
Give me some concrete examples.
Okay.
How does this translate into action?
So let's say you're looking to secure a loan
Okay.
or attract investors.
Mm-hmm.
Having a recent incredible business valuation gives you leverage in those conversations.
Okay.
You're not just relying on gut feelings or guesstimates. You have solid data to back up your claims.
It's like walking into a negotiation with a trump card.
Exactly.
Right. It gives you confidence and credibility.
Right. 100%. A solid valuation can also help you navigate mergers and acquisitions.
Okay.
Whether you're the buyer or the seller,
Mm-hmm.
you'll have a clearer understanding of what's fair and can negotiate from a position of strength.
So it takes the guesswork out of the equation.
Yes.
And helps ensure that everyone's
Right.
getting a fair deal.
Exactly. And even if you're not planning any major transactions, a business valuation can be a powerful tool for strategic planning.
I'm intrigued.
Oh, okay.
How so?
It can help you identify areas where you might be over or under investing your resources.
Okay.
Perhaps you need to ramp up your marketing efforts
Mm-hmm.
or streamline your operations. A valuation can illuminate those blind spots and help you make adjustments to optimize your business for growth and profitability.
So it's like having a roadmap that
Exactly.
guides you towards
Yeah.
your long-term goals.
It can also be a fantastic motivator for you and your team,
Yeah,
having that clear target in mind.
right.
A specific valuation you're striving for
Mhm.
can focus your efforts and inspire everyone to work together towards a shared vision of success.
This has been so eye-opening.
Good.
Before this deep dive, I'll admit I thought business valuation was just like a
Yeah.
dry technical exercise,
Yeah,
but I'm starting to see it as something much more profound.
I agree.
It's about building a legacy, creating something of lasting value
Yes.
that reflects your hard work, your vision,
100%.
and your contribution to the world.
Beautifully said. And that's what makes this topic so fascinating. It's not just about numbers.
Yeah.
It's about understanding the essence of what makes a business truly exceptional.
Before we move on to the final part of our deep dive, I have one more thought-provoking question
Right.
for our listener.
Yeah.
Imagine you could wave a magic wand
Okay?
and instantly improve one qualitative aspect
Okay.
of your business. What
Yeah.
would it be?
Yeah.
Would it be strengthening your team,
Yeah.
boosting your brand reputation, or maybe refining your product market fit? Think about that, and we'll be right back to wrap things up.
Sounds good.
Welcome back. So I hope you had a chance to really think about that magic wand question.
Yeah.
It's pretty amazing how such a simple thought experiment can spark so many ideas.
It really is. Sometimes all it takes is just a little shift in perspective to unlock like a whole new level of potential within our businesses.
Totally.
Mm-hmm.
Okay, so before we wrap up this deep dive into business valuation,
Yeah.
there's one concept I'd love to explore a little further.
Yeah.
We touched upon it earlier, but the idea of a takeover premium.
Okay.
Can you remind us what that is
Of course.
and why it matters?
So a takeover premium is essentially the extra amount a buyer is willing to pay
Mm-hmm.
above and beyond a company's estimated market value when making an acquisition.
So it's kind of like saying, I want this business so badly,
Yeah,
I'm willing to pay a premium price for it.
exactly.
So what makes a business so irresistible that someone would be willing to dig deeper into their pockets?
Well, that's where those strategic considerations come into play.
Okay.
It boils down to the unique value a particular business brings to the table.
So it's not just about buying the assets or the current cash flow.
Right.
It's about acquiring something special, something that
Yeah.
gives the buyer a competitive edge.
Exactly. Imagine you're a company looking to expand into a new market.
Okay.
You could start from scratch,
Yeah.
build a team, develop products, try to attract customers.
Hmm.
Or you could acquire a company that already has a strong foothold in that market.
So it's like taking a shortcut to success.
It can be.
Okay.
That's why a buyer might be willing to pay a premium for a company that has a proven track record, a loyal customer
Yeah.
base, a well-established brand, or valuable intellectual property.
So it's about acquiring not just the company itself, but
Right.
also its expertise, its
Yeah.
reputation,
Relationship.
all that good stuff.
Those intangible assets can be incredibly valuable and difficult to replicate.
Okay, what about the idea of synergy? I've heard that term thrown around a lot
A lot.
in the context of mergers and acquisitions.
Synergy basically means that the combined company will be worth more than the sum of its parts.
Okay.
It's the magic that happens when two businesses come together and create something greater than they could have achieved individually.
So it's about finding those 1 + 1 = 3.
Precisely.
Okay.
Maybe the two companies can cross-sell products to each other's customer bases,
Okay.
streamline their operations, or combine their expertise to develop innovative new offerings.
Yeah, that makes total sense.
Yeah,
So that potential for synergy can definitely make a business more appealing
for sure.
and drive up its price tag.
Certainly can. And that's why it's so important to have experienced advisors and valuation professionals involved in these kinds of transactions.
Yeah.
They can help both buyers and sellers navigate the complexities, identify potential synergies, and ensure a fair deal for everyone involved.
This has been such a fantastic deep dive into the world of business valuation.
It is.
We've covered so much ground. Yeah, from the basics of like why it matters to the nuances of what drives value.
Totally.
Both quantitative and qualitative, but beyond all the numbers and formulas.
Yeah.
What I'm taking away from this is a deeper appreciation for the entrepreneurial journey itself.
I agree.
It's about building something meaningful,
Yeah,
something that has a positive impact
100%.
on the world.
It's been a pleasure exploring these ideas with you today.
And to our incredible listeners, thank you for joining us on this deep dive.
Yes, thank you.
I hope you're walking away with a newfound understanding of business valuation and a fresh perspective on the possibilities within your own companies.
Remember, whether you're running a small startup or a large corporation, understanding the principles of business valuation can be a game changer.
Totally.
It empowers you to make smarter decisions, unlock growth opportunities, and create businesses that are truly valuable, both financially and in terms of their impact on the world.
Until next time, keep those entrepreneurial spirits high. And those valuations soaring. Welcome back. I hope you had a chance to really ponder that magic wand question.
Yeah, me too. It's really amazing how a simple thought experiment can spark so many different ideas.
Totally. Okay, so before we officially wrap up this deep dive on business valuation,
Okay.
I want to touch on one more concept that we kind of touched on earlier, but we didn't go into too much detail.
Hmm.
And that's the idea of a takeover premium.
Right. Okay.
So can you remind us what that is and why it matters?
Sure. So a takeover premium is essentially the extra amount of money that a buyer is willing to pay
Okay.
above and beyond a company's estimated market value when they're making an acquisition.
So it's like they're saying, I want this business so badly
Yeah.
that I'm willing to pay like a premium price to get it.
Exactly. Yeah. It's basically saying that this business is worth more to me
Right.
than it might be to someone else.
Okay, so what makes a business so irresistible that someone would be willing to pay more than it's technically worth?
Yeah. Well, it often boils down to the unique value proposition that a particular business brings to the table.
Okay.
It's not just about the assets or the current cash flow. It's about acquiring something special
Mm.
that gives the buyer a competitive edge.
So it's like they're not just buying the company, they're buying like their expertise, their reputation.
Exactly. Yeah,
Yeah.
they're buying the brand, they're buying the relationship.
All that good stuff.
Exactly. And those things can be incredibly valuable and very difficult to replicate.
Okay, and then what about this idea of synergy
Okay.
that I've heard thrown around a lot in the M&A world?
Right. Yeah. So synergy basically means that the combined company will be worth more than the sum of its parts.
Okay.
So it's kind of like that classic 1 + 1 = 3 scenario
Yeah.
where the two companies together are more powerful than they would be individually.
Okay, so can you give me like a concrete example of what synergy might look like in an actual like business acquisition?
Sure. So imagine you have two companies and one company has a fantastic product, but they struggle with marketing.
Okay.
And then you have another company that's amazing at marketing,
Mm-hmm.
but their product isn't quite as strong.
Okay.
If those two companies were to merge,
Yeah.
they could create something truly remarkable.
Interesting.
The company with a great product would now have access to top-notch marketing expertise.
Yeah.
And the company with the marketing prowess would have a killer product to sell.
So they're both benefiting.
Exactly. They both benefit, and the combined company becomes much more competitive as a result.
Makes sense.
Yeah.
Wow, this has been such a fascinating deep dive into the world of business valuation.
It has been.
I feel like we've covered so much ground today.
We have.
From the very basics of why it matters to the nuances of what actually drives value.
Yeah.
But beyond all the numbers and formulas,
Right.
what I'm personally taking away from this is just like a much deeper appreciation for the entrepreneurial journey itself.
I agree. It's not just about the numbers. It's about the passion. It's about the vision. It's about creating something meaningful that has a positive impact on the world.
Couldn't have said it better myself.
It's been a pleasure.
And to our incredible listeners, thank you so much for joining us on this deep dive.
Yes. Thank you so much for listening.
I really hope you're walking away with not only like a newfound understanding of business valuation,
Right.
but also like a fresh perspective on the possibilities that exist within your own businesses.
Absolutely. Remember, no matter what stage of business you're in,
Mm-hmm.
understanding the principles of business valuation can truly be a game changer. It empowers you to make smarter decisions, unlock growth opportunities, and ultimately build a business that's not just financially successful,
Right.
but also has a positive impact on the world around you.
Couldn't agree more. Well, that is all the time we have for today.
Yeah.
Thank you so much for joining us on this deep dive into business valuation.
Thank you.
Until next time.